I still remember the first time I saw a meme coin explode. It wasn't on a chart. It was on my phone, late at night, scrolling through Twitter while the market was quiet. Someone posted a screenshot of a trade. A few $1,000s turned into millions. The replies were pure adrenaline. Rocket emojis, laughing faces, people saying, "This is the future." Others saying, "If you miss this, you'll regret it forever." And for a brief moment, even after 15 years in the markets, I felt something stir inside me. Not greed, something more subtle. Curiosity mixed with disbelief. Because meme coins don't look like investments. They don't even pretend to. No revenue, no roadmap, no product. Just a joke, a dog, a frog, or a phrase that somehow catches fire. And yet, money flows into them like gravity no longer exists. That night, I asked myself a question I've learned never to ignore. Why do rational people abandon rational thinking so easily and so completely? That question is the real reason this video exists. Because meme coins are not just a crypto phenomenon, they are a mirror, and what they reflect is uncomfortable. Years ago, during my early trading days, I watched something similar happen, long before crypto, before social media made speculation instant. It was a small-cap stock frenzy, chat rooms, hot tips, stories of overnight wealth. Everyone knew someone who made it big, and everyone believed they would be next. I didn't buy the story at first. I analyzed fundamentals, market structure, liquidity. I told myself I was smarter than the crowd. Then one trade went my way, and that's when the illusion began. A fast win has a strange effect on the human mind. It doesn't just reward you financially, it rewires your sense of reality. You stop asking why something works. You start believing it works because you touched it. Meme coins do the same thing, but at scale. People don't fall in love with the coin. They fall in love with the feeling of being early, of being chosen, of finally beating a system that has ignored them for years. And that feeling is powerful enough to silence every warning sign. I've spoken to traders who knew meme coins were irrational and still went all in. I've watched disciplined investors throw away years of risk management because this time is different. I've seen smart people confuse probability with destiny. And every time, the story ends the same way. Not with the crash, but with silence. Because when the music stops, no one tweets their losses. So before we ask whether meme coins are legends or illusions, we need to slow down and look inward. We need to understand what part of us they activate and why the market knows exactly how to press that button. This isn't a story about tokens. It's a story about human nature and the price we pay when we forget that markets are designed to test it. At some point, every meme coin story reaches the same crossroads. There's a moment when the price starts moving faster than logic can keep up. Candles stretch, volume spikes, screenshots multiply, and suddenly no one is asking what this thing is anymore, they're only asking how high it can go. That's the mistake. Not buying the meme coin, but surrendering your thinking the moment the crowd gets loud. I've watched this pattern repeat across decades in markets. The surface changes, stocks, dot-coms, NFTs, meme coins, but the internal mechanism never does. When something goes vertical, the brain stops evaluating risk and starts negotiating identity. People don't say, "I want profit." They say, "I don't want to be left behind." And that fear is far more dangerous. In the meme coin frenzy, pain doesn't come from losing money at first. It comes from watching others win while you hesitate. That hesitation slowly turns into self-doubt, then resentment, then impulsive action. And by the time you finally click buy, you're no longer entering a trade, you're entering a narrative, a story where you are late, but still hoping to be early enough.
This is where most retail traders make the same silent error. They mistake momentum for inevitability. They see price movement and assume destiny. They see community energy and assume sustainability. They forget that markets don't reward belief, they reward positioning. And meme coins are brutal teachers of this lesson. Because beneath the jokes and the memes, there is a very real and very precise structure at work. Liquidity doesn't appear magically. It is built, attracted, and harvested. Early holders don't need the price to go up forever. They just need enough new participants to enter after them. That's the part no one likes to talk about. The revelation usually comes too late, not in a chart, but in an emotion. The moment when price stalls, when volatility turns chaotic, when selling feels harder than buying ever was. That's when traders realize they weren't part of a movement, they were part of an exit strategy. I've sat with traders after these moments, not angry, empty, confused about how something that felt so alive could disappear so quickly. And the question they always ask is the same: how did I not see this coming? The answer is uncomfortable but simple, because you weren't looking for truth, you were looking for confirmation. Meme coins thrive in that gap. They don't need deception, they just need enough hope, enough noise, and enough people willing to suspend disbelief in exchange for possibility. Once you understand that, the illusion starts to crack. You begin to see meme coins not as opportunities or scams, but as emotional accelerators. They compress years of psychological lessons into days. They reveal how quickly discipline dissolves when probability is replaced by fantasy. And that realization, painful as it is, becomes a turning point. Not away from trading, but toward maturity. Because when you stop asking, how much can this make me, and start asking, who is this really for, you step out of the crowd. You stop chasing legends, and you stop fearing illusions. You begin to see the market not as a place to escape reality, but as a place that constantly reflects it back to you, amplified, unforgiving, and honest.
When you strip meme coins of their jokes, their slogans, and their communities, what's left is not technology. It's behavior. Meme coins don't move markets because they innovate. They move markets because they exploit a very old mechanism, one that predates crypto, stock exchanges, even money itself: collective belief under uncertainty. In every speculative cycle I've lived through, there's always been an asset that doesn't make sense on paper, yet captures imagination at scale. It becomes a social signal. Owning it says something about who you are or who you hope to become. Meme coins fit that role perfectly. They're cheap in appearance, explosive in narrative, and simple enough to remove friction from decision-making. No white paper to read, no valuation model to build, just a story you can join instantly. That simplicity is not accidental. From a market structure perspective, meme coins are ideal liquidity magnets. Early participants understand this intuitively. They don't need the project to succeed, they need participation to grow. Price appreciation is not the goal, attention is. And attention, once concentrated, becomes liquidity. This is where smart money thinking diverges sharply from retail thinking. Retail traders often ask, is this a good coin? Insiders ask, where will the next wave of buyers come from? In meme coin cycles, that wave is manufactured through visibility. Viral tweets, influencer mentions, exchange listings, community hype, all carefully timed to coincide with price expansion. Each surge invites a new layer of participants who believe they are early, even when the structure says otherwise. I've analyzed enough on-chain data to see this pattern clearly. Wallet distributions widen rapidly. Early holders begin reducing exposure quietly while public enthusiasm peaks. Volume increases, but its character changes from accumulation to distribution. Price may still rise, but the risk profile shifts dramatically. This is the part retail traders rarely understand. Risk doesn't increase when price falls. It increases when certainty feels highest. Meme coins weaponize that certainty. They create an emotional environment where skepticism feels like weakness and caution feels like ignorance. Doubt is framed as missing out. Discipline is reframed as fear. And by the time reality enters the conversation, most participants are already positioned against it. There's a case I often revisit, not because it was the biggest meme coin explosion, but because it was the cleanest. Early wallets accumulated aggressively at negligible prices. Social traction followed. Listings followed. Then came the moment everyone remembers as the top. But on-chain, the story was already over days earlier. The smart money didn't need to predict the collapse. They simply needed liquidity to exit. Once that liquidity was fully harvested, the narrative lost its function. Without attention, price had nothing left to lean on. And it fell. Not because the joke stopped being funny, but because the structure stopped supporting it. This is the uncomfortable truth. Meme coins are not irrational markets. They are hyper-rational systems optimized for emotional extraction. They reward speed, positioning, and narrative timing, not belief, loyalty, or conviction. Once you see this, the question changes. It's no longer, should I trade meme coins? It becomes, do I understand the role I'm playing? Because meme coins don't fail retail traders by accident. They succeed at revealing who entered without a plan. And the market always charges tuition for that lesson.
Understanding meme coins doesn't require cynicism. It requires clarity. Once you accept that meme coins are not built on fundamentals but on participation, your role as a retail trader changes immediately. You stop asking whether something is real and start asking whether you are positioned correctly for the phase you're entering. The first discipline is timing your curiosity. If a meme coin reaches you through mass excitement, trending hashtags, mainstream influencers, screenshots of life-changing profits, you are not early. You are being invited into a story that is already in motion. That doesn't mean it can't go higher. It means your risk is no longer symmetrical. The second discipline is sizing your exposure to reflect uncertainty. Meme coins should never demand conviction-sized capital. They are asymmetric by nature, not because upside is guaranteed, but because downside is sudden. Allocating small, predefined risk keeps you mentally flexible. It allows you to observe without becoming emotionally invested. The third discipline is separating narrative from structure. Price can rise while structure deteriorates. Volume can expand while distribution accelerates. If you're not watching how liquidity is behaving, who is accumulating, who is exiting, how fast wallet concentration is changing, you're trading blind. The joke may still be funny, but the exit doors may already be narrowing. Finally, the most important application is internal. You must learn to recognize when a trade stops being a decision and starts becoming a statement about who you want to be. The moment you feel the need to defend a position emotionally is the moment you've lost objectivity. Meme coins are not dangerous because they're volatile. They're dangerous because they make volatility feel meaningful. If you can stay detached, they become instruments. If you can't, they become mirrors. So, are meme coins legends or illusions? They are neither. They are accelerators. They accelerate hope. They accelerate fear. They accelerate self-deception. And for traders who pay attention, they accelerate learning. The market doesn't care whether a coin started as a joke. It only cares whether enough people believe in the same moment long enough to create liquidity. Once that purpose is fulfilled, the story moves on, without apology. If there is one lesson worth carrying forward, it's this. The market will always offer shortcuts, and it will always test whether you're willing to trade understanding for speed. Meme coins are not traps, they are exams.
and every trader eventually sits for one. If this video helped you see the meme coin frenzy with clearer eyes, consider subscribing to Staro Trading. This channel exists to explore markets beyond hype, to understand how psychology, structure, and human behavior shape every price you see. Leave a comment below and tell me, do meme coins represent opportunity, or are they simply the market's way of exposing impatience? And remember, master yourself and you master the markets.